It's a step up from infinite banking because infinite banking is more along the lines of whole life. But this is more of like an IUL, but then it's an IUL 2.0. The insurance carrier loves how he's structuring these policies that they're actually taking their own money and matching the money that they're putting in into premiums every year.
This model continued to grow, and you're essentially attaching an infinite bank that you're funding your business for. So essentially, how we're saying is that we're going to raise capital once, and we'll never have to raise capital again.
Welcome to Nursing Real Wealth. Today we are joined by Marc Del Priore and Mitch Kida, experts in real estate investing, land entitlement, and capital raising. Marc and Mitch have extensive experience in securing capital for various real estate projects and business acquisitions, including gap funding and transactional funding. Marc and Mitch, welcome to the show.
Thank you for having us.
Yeah,
pleasure to be here.
Yeah. Awesome. Glad to have you guys on. And let's dive right in. I want to first hear a little bit about this land entitlement stuff that you guys do. For those who are not as familiar with it, would you share with us a little bit about what land entitlement is, and also how you found yourselves into that niche?
Yeah, I can dive into that, give you a 30-second overview in a nutshell. Essentially, it's the governmental approval process. It's the first stage of development. So whenever you have a raw piece of dirt, you have to essentially submit a site plan to the jurisdiction, whether it's a city or county, and then they have to approve that site plan. So whether it's a commercial retail strip mall, or if it's a single family subdivision or a industrial warehouse, you got to get that site plan approved. And once you get that site plan approved, it's now considered shovel ready, and that's essentially land entitlements in a nutshell. And then how we kind of got introduced to that was another quick 30 seconds. Came into real estate just kind of like a lot of other people. COVID, was a PE teacher before. In 2020, COVID came in, a lot of stuff shut down, a lot of free time, right? And got into wholesaling through YouTube, all the things, YouTube University, and started wholesaling houses. Then got into land, started wholesaling land, and then came across a couple mentors that specialized in land entitlements. And that's essentially where that journey started about 3 or so years ago. And haven't really looked back since then. And then formed the various connections we have today, other guys that are doing land entitlements, developers, other real estate investors, family offices across the board, right? And that's how Marc and I ended up partnering up.
Nice. So in land entitlement, obviously you're buying raw land, rough land, and then you're making it ready, shovel ready for someone to develop on. You're not doing the development; you're just getting the land ready. And so, what kind of profits or what kind of possibilities, I guess, are there in that for making money? How's that work?
You can go from a simple lot split to where you're taking one lot and splitting it to two, and they have two separate APNs, or you can go all the way to where there's some people in our network that are doing 1,500 unit, 2,000 unit plus master plan communities where they're making upwards of 8, if not 9 figures on one project. It's really infinitely scalable, just depending on how big of a project or how big the opportunity of the land size itself is.
Yeah, I have a friend that I connected with who does I think something similar to this in Texas. He'll go and buy 20 acres at $15,000 an acre, and they'll go and subdivide it out into these little I forget what they call them, ranchettes or something like that, where it's like 10 acres, but it's real popular right now in Texas. People don't want to buy 20 acres, they want to buy 10 acres, and he'll sell it for $30,000 an acre divided into these individual lots. Would that be fairly similar concept?
Yeah, that sounds like more of a rural strategy. That's what a lot of rural land subdividers do. And these, kind of 30, 40, 60 minutes outside of a major metro, kind of where it's close enough to town to where people can drive out to their ranchettes for the weekend and hang out or do whatever. Or it's solely people that just want to be outside of, the city in general. So there's so many possibilities that you can do with land. It's just really finding which it's a niche within a niche, right? There's so many different avenues inside land entitlements or just the land space in general. Because at the end of the day, it's the foundation of real estate. Everything starts with land.
Cool. That's awesome, man. Mark, I want to go to you and just wanted to kind of explore, what's your background with real estate? How did you end up kind of getting into this as well? And how did you end up meeting Mitch and forming this partnership with him?
Yeah. So when I first started in real estate, it was actually selling leads to real estate investors to fix and flip, right? Professionals and et cetera, and getting to a point where, hey, we have motivated sellers, right? Looking to sell, in different parts of the country. That was a lead generation company that I owned that I recently sold earlier this year. And essentially what that was is mass scale. I mean, you're talking thousands and thousands of leads per month. And it was ran through an API. I mean, it wasn't just real estate at that time. It was a combination of multiple different verticals, but it was ran through an API. But I always liked real estate because I started finding out how much my clients were really making. Versus, like an insurance client would make 1,000 or 2,000, maybe 10,000, on one deal if they're lucky. And then I was take a look at the cost per acquisitions here, cost per acquisitions there, which is essentially how much they're really making at the end of the day after they pay their marketing budget off, right, and expenses. And real estate was always the best rate of return, right? So if they just need one deal, you can make several tens of thousands if you do it right and it's the right deal. So I always was attracted to it. So I eventually ended up joining Pace's community, right, and stuff too, because I approached it in a way which is a little bit more unorthodox, but I am one of those more unorthodox people as you get to know me. So I said, why don't I join the community, not so much to do real estate investing and flipping and all that in the beginning. Let me learn about it. Let me research and do the modules, but let me also present to the different investors in here and people leads. And my goal was, hey, let me offer you free leads if you're the right player, of course. In exchange for that, I'll do all your marketing for free. And when you close a deal, you pay me 30 or 40%, right? Or sometimes 50%. And the profits were so big that it was pretty cool. So that's how I originally got started. Then I was jumping around. I was thinking about doing, my own company where I was going to do my old wholesaling and cold calling. So I joined this one mentorship. Didn't really like it because it was a little too slow paced. It was driving for dollars. To me, it was slow paced, right? And I said, how can I make this bigger, faster? And then, so I joined this other company for literally like a month, just kind of helping us at 1099. And got access to go high level, right, and experienced the power of that. And then I had a lead that come across, and this is how I met Mitch. A lead came across, and there was an RV park in Florida. The guy was one of the biggest guys running up the East Coast there in the Sun Belt regions. And I said, who do I know from Sub 2 that I've talked to the past couple months that is doing RV? So I went into my phone, and I got like 4,000 people in here over the years. I save everybody. And long story short, I saved them with their name, and then I saved them with a description of what they do, right? A little note. And Mitch was saved in my phone as, Mitchel Kida, and then RV, specialist or whatever. So I typed in my phone RV, right? And then his name came up. I'm like, well, he's in Sub 2 and he's RV, call him up. And we started talking, and I think that call, and I usually don't talk that long on the phone, it was like 2-hour call, all business. A little bit family stuff, but mainly business about, wait, what is land and what are you doing with land and how's it work? And he's like, wait, you're doing leads? He goes, I was looking for a guy like you. I need that like whole aspect of the marketing side. And he knows the land side really well. So that's how we partnered, and the rest is history. And then we started getting into raising capital and doing deals together. And we really just hit the ground running. It's been really special. So
that's great. That's awesome.
Yeah.
Did you want to add something to that, Mitch? I saw you popped yourself off mute.
Oh no, I was just gonna say, yeah. I mean, it's been ever since. It's like kind of that book Rocket Fuel, right? Whenever you find your equal opposite, right? Mark is so good at marketing and sales, and I was more of the nuts and bolts of actually doing the projects, right? And when you start getting into these larger projects, land entitlements or land development, there's so many moving pieces. You can't wear all the hats, right? It's impossible. It's just you need a team. And that's where it really started exploding back in January when we started working together full time. So it's been really cool. It's been really fun and exciting.
How long did you say you guys have been working together now?
Since like last week of
Oh
December.
wow. Okay, gotcha. All right. So this is
Yeah.
relatively fresh that you guys have been working together, and
Yep.
it's exploded since then. That's awesome. That's great.
Yeah, I mean, basically, we're just leveraging each other's expertise, right? So him on the foundational understanding of real estate, the concepts, and all the ins and outs of the contracts, and then me going to find the opportunities and marrying the two together. It's just exploded. So it's been awesome. Yeah.
That's awesome. Great. You mentioned that you guys have been getting into raising capital. I'd love to explore that journey for you guys as well. You've got access to a significant amount of capital through various different options. So, do you want to just share a little bit about that? How you ended up with access to so much capital, and what you're doing with that?
Yeah. So I'll touch on it a little bit, and then Mitch will probably want to chime in. So Mitch's concept, which I've kind of adapted to, right, and not adapted to, but embraced, which is who, not how, right? So when you start living by that concept and that rule of thumb, and specifically in business, right? Who, not how could be with friendships and how do I get into certain whatever. But with business, it's super important. And we use that concept straight away, along with my sales and marketing tactics to be able to figure out who they are and how do we get in front of them and what do we say to them when we're in front of them and what time of the day. Do we hit them up at night? Do we hit them up in the morning? All that stuff, right? So we started approaching, we signed up with Gator, so we're in Gator, pretty fresh for us, right? But we also wanted to go outside the box. So we started automating a lot of stuff online to start pulling in our own leads of the who's, right? Who are those people? So the angel investors, the fund managers, et cetera, et cetera. And we've quickly grown access to tons of different outlets of capital very quickly because of, I don't know, maybe just a string of luck. I'm going to say it's definitely hard work, a lot of brainstorming. Mitch and I have tons of conversations every day about, where are we going next and what are we doing this and what should we say? So, but basically, I don't know if you want me to go into what we have access to, but it was really a matter of, yeah. So, okay. So currently now we have a bunch of different outlets. We have one fund that's 50 million that looking to deploy towards multifamilies, towards land, and towards RV type of transactions. They're focusing mainly in Florida, but they would look at some other stuff outside, maybe in some of the Sun Belt regions if it's the right opportunity. Texas is another opportunity. Then we have another fund that we have access to that's more so along the lines of no commercial stuff, but more so just private, a bunch of high net worth individuals, private, like a family office, right? And that is more like hard money loans, right? So I think in that fund is like up to 300 million specifically for HML currently that they're looking to deploy, and they need us to help them find those opportunities. So we're reaching out and trying to find people who are looking for that. We have another group that's out on the West Coast that has access to 9 figures that are looking to do the land development side all the way from the raw land all the way to vertical. So that means taking the land, getting it approved, developing all the inner workings, and then going vertical and building on top of it. And they want to make multiple streams of income along every step of the process. So we're looking for deals for that. And then we have some other people we've connected with that are also high net worth individuals, accredited investors that have 8 figures that they're sitting on. And they're just looking for any type of real estate transaction that's going to make sense for them, that will get them a good return. So tapping into all that is like, wow, it's a little bit like, okay, now we have a lot of responsibility. So now we're putting processes and systems in place. We're hiring a team to submit our deals. They come into us. We submit them straight to the underwriters. It's going to be an automated process we're working on as we speak. The underwriters take a look at them. They either respond back with no thank you, or they respond back with get me this. We need to move forward within 7 to 10 days. And we're automating those processes. So we're excited about that. We have our web design team setting up websites to kind of get these forms submitted quicker to the underwriters. And that's literally what it is. So I don't know if Mitch has anything to add, but yeah, that's pretty much what.
Yeah. So essentially, there's two things we're doing, right? We're doing our own land entitlement, and then we built a boots on ground team in Dallas Fort Worth to do actually horizontal development as well on the single family side, where we'll actually go in, put in the roads, streets, curbs, gutters, utilities, and sell the finished lots to those same home builders that we would sell our land entitlement projects to. Now, the caveat to that, the catch is, those projects take anywhere from 9 to 24 months to get paid on, right? For us to get a taste. So we're like, well, okay, all right. How do we leverage those connections we have already in that space that we're utilizing to fund those deals into more short-term today money, right? Building the two vehicles, right? And that's where Mark was alluding to, where we're doing a lot of stuff on the hard money lending side, private money lending side, gap funding, transactional funding, EMD funding, to where that's how we're making our money today. It's chaotic. The today money is very chaotic, but we're trying to get that as pretty much as automated as possible right now.
Just streamline it. Yeah, it's more so on that too. Mitch and I just got off a call. It's more about who, not how. That's our main thing. So yeah.
That's awesome.
Yeah, and that's essentially what we're doing in a nutshell.
But go ahead. There's other things I want to talk about that I think that we're going to get to, which is the exciting part.
Yeah, absolutely. No, that's great. So obviously, on on this note of private capital and what you have access to, I think a common question with this is what kinds of deals are they looking to fund, right? So you've got hard money, you've got a family fund, you've got kind of a wide variety, you've got some multifamily they're looking at. What's kind of the wide array or examples of the types of real estate deals you guys are looking to be able to fund?
Yeah. So when we look at, it's a good question. Yeah, I touched on it a little bit, but essentially, depending on what group we go to, what fund we go to, it's going to differ. So certain funds will want land, and multifamily. Another one may want just HML type of stuff, PML type of stuff, but that could be fix and flip. That could be multifamily. That could be land deals that just need transactional funding, right? Where you have a same day double close. It could be, RV parks, even to the point where one of the funds will do business acquisitions and lend a line of credit to do that, or business funding. So there's a couple different avenues that the capital can be deployed on, depending on where we go, to who we go to, in our network.
It's essentially having all the tools in the tool belt, right? What we're looking for is good operators with good projects. And then when those projects come around, who are the people that are looking, what are the groups, what are the family office that are looking for these types of transactions, right? And we're just putting all the pieces together. That's essentially it.
Yep. Yeah. Fantastic. So, just before we get kind of into this cool niche that I know you're aching to talk about, I'm looking forward to talking about this as well. But I do want to ask one more question, kind of in this vein of private lending. Obviously, you've done a really great job of getting in front of high net worth individuals. Was that personal network that you leveraged, or were you using, marketing techniques? What was your methodology for getting in front of those people?
I would say, yeah, it's a good question, but I would say, if you don't have a positive mindset, that's the beginning of every day of your life for the rest of your life. You look at all the different entrepreneurs, influencers out there. Their mind is there first. So that's number one. I'm always going to say that. Also, I'm on the spiritual side too, so I really like to believe in the universe and things working for me when my mind's in the right place, the universe is in the right place, and the opportunities are in the right place. So I would recommend anyone to start there. If your mind's not in the right place, get it there before you even start trying to think. And then it's the matter of thinking like this, right? It's like, hey, I got 8 to 12 hours in a day potentially that I'm going to work, right? If you're really grinding. Some people are W-2, then they're coming out of the W-2 and they're working another 3-4 hours. They're just trying to get out of that. So you got 8 to 12 hours. If you got those hours in a day, and you got to put it in, and it's taking time away from your family, your kids, et cetera, whatever you have, why not go after big, right? And then it's a matter of, okay, well, what is your niche? And then what is big in your niche? And that you start breaking it down. You start reverse engineering it. If I was to make $100,000 in 30 days, what kind of deal do I have to do that? What size is that deal? Who are the players involved? How do I get to those players? And then you start reverse engineering it. And when you start doing that, you start getting to a place where you're like, now I have it on paper. Now I make it a reality. And now I do the outreach, whether it's phone calls, whether it's, SMS, etc., to get in front of those people that I know that I only need one or two of those for the month, and I'm going to make a big, big month, right? And that's how you do it. That's how we do it. I mean, that's how I've taught myself to do it over the years. So.
Oh, that's fantastic. Cool. Well, moving on to this next category, we're going to get into a little bit of, I think we're saving the best for last, which is your life insurance thing. But I do want to talk a little bit about using life insurance. Mark, you had mentioned that using life insurance to fund land, and that you could use life insurance to fund land and real estate deals. Can you elaborate on that strategy of using life insurance and how it benefits investors?
Absolutely. So everyone's heard of the term infinite banking. It's very popular now. If you're on TikTok or Instagram, it's all over the place. A lot of people are talking about it. So it's a similar concept to that, but it's actually what we're calling premium banking because it's a step up. And the reason is, I'll kind of give you a quick 30 seconds. It's a step up from infinite banking because infinite banking is more along the lines of whole life, which is a type of life insurance. But this is more of like an IUL, but then it's an IUL 2.0. So it's the next step above that. And the reason that it's so much far advanced from a whole life, an IUL, and an IUL 2.0 is what we're utilizing is because it was literally created, and we know the founder who created it for the past decade and got it approved by Congress and got it approved by FINRA and all these different legislations. And he has a multi-billion-dollar company backing him, right? An A-rated company, insurance carrier, to back him to get it done. And what's happening is the insurance carrier loves how he's structuring these policies that they're actually taking their own money and matching. Okay, they're matching the money that they're putting in as the premiums every year. So if you're a customer, for example, you get a life insurance policy with this particular company, the only company in the world doing this right now because it has a patent pending. He created it. It's a great guy. Long and short of it is, let's say you put $10,000 in a year for your life insurance, and then $10,000 the next year, and you have to keep paying that. In year 3 and 4 and 5 and continuing, they will continue to put money and match your 10,000. So you put 10,000, they put 10,000. You put 10,000, they put 10,000. It's unheard of. It's a compound interest that no one's ever doing, and it's a newer concept that is it's taking the world by storm. So we're literally using that concept, and we're saying, hey, why can't we put this into a business model? Instead of me and Mitch or you going out to get our own, life insurance policy and then just saying, hey, I got one for my family, it's going to compound. That's awesome. The fact of the matter that it's like a 401k match. They're matching. It's unbelievable. 100% of what you put in. But we're taking it to the next level and saying, why don't we implement this into a business model where then we could take those premiums, be paid by the business almost as an expense, right? And I don't know if people know this, but about infinite banking, you get a line of credit whenever you do that. It's called your cash value, which you could take out a line of credit against your cash value. And I don't want to talk too much about it because I'm going to get ripped apart probably in the comments. But long story short is you're going to get a cash value, which you could take a line of credit out against. I think it's at 5% currently, which is pretty inexpensive compared to other banks and stuff. And then you take that in your business model, right? And you go take that line of credit. Let's say you get a bunch of your key employees. They all have policies. You take all of their lines of credit and go use it towards investing into your business, real estate, land, business acquisitions, using the money to lend out on HML deals, PML deals. Remember, you only have a 5%. So if you go do an HML deal, or a PML deal at 15%, look at that arbitrage right there, right? That's what we're going to be doing, part of it. And another part is doing with land, right? So essentially what it is, I'll give you the last piece of it. It's called triple compound interest is what it is. When you put your premiums in every year and the insurance company matches it, your cash value and those premiums will stack 6 to 10% every year, guaranteed, right? Unless the market goes down all the way, then you don't lose anything, but you don't gain anything. It's got a 0% floor, right? So while that's compounding, right, over the course of 10 years, it's always been up. I think about 6.23% is the last I saw. That's compound number one. The second compound is the insurance carrier matching you every year for a certain amount of years, every premium you put in. That's the second compound, which you don't get to keep that money. You get to keep the interest from that money. It's not like they're giving you free money. They're not giving it to you, and they're going to get that money back at your death benefit, the money that they're putting in. So it's not like you get to keep it. So when you pay out your death benefit, they will take their money back, which was never yours to begin with. And that's how they compensate themselves. But you get the interest that it accrues. And the third part is when you take that line of credit and invest it towards a real estate transaction. And when those profits come back with your arbitrage, that's the third compound interest. So now you got those three, and it's unmatched out there. So we're literally planning, and this is a joke, right? We're literally planning to take down the Federal Reserve with this trend.
There you go.
But it's so powerful that implementing it into a business and into the right business models that have a pretty good profit margin, anybody can do it. And we can help them set it up because we have this founder that has this all put together already. So,
dang. So the chief difference is the way that they're matching your contribution. Is that correct? Is that what I'm picking?
And it's a very low cost. Yeah, it's a very low cost insurance policy too. So like if you, let's just say for some heavy hitters put in like 100,000 year one, right? Well, then you're going to get 98,000 available for a line of credit in year one. Whereas a lot of whole life policies, you may only get 89,000 out of the 100,000. They take a lot of fees out in the beginning. So whole life is very expensive, and you don't get that compound interest from the match program from the insurance carrier. Yeah.
Yeah. Okay. Interesting. Yeah. I'm tracking with you. I'm not sure if everybody in the audience will be totally tracking at this point, but it is a worthy thing to research and dig into to really understand not whole life as an insurance policy, but whole life as an investment.
Yes.
We have a pitch deck that we put together. So, I mean, by all means, if you're able to link that to this video, we can give you the pitch deck. People can definitely click on it, open it up, and kind of take a look at the whole concept and how it works out in our business model.
Love it. Yeah, we can definitely put that in the description below. So I would love to understand a little bit more about, a few different applications you see in your mind for this. My mind is going, but I would love to hear a few more, if you want to expound a little bit more on some of the applications that you guys see this being beneficial for. How are you using it in land particularly? I'd love to hear that.
I can go exactly what we're planning on to do with this, right? It's not an overnight process, right? Compound interest takes time. So essentially what we're doing is instead of doing a 506c, right, which is a type of fund that you would raise capital through, we'd be doing this model, right, doing a holding company where we raise capital through equity partners of the company. They put in their capital, and then we start running the company off this model, right? So essentially, the next 5 to 10 years, the goal is to be a completely self-funded development company where we're strictly doing build for rent, utilizing our own internal infinite bank, essentially. And what's cool, right, is because every time we take a line of credit, right, from our policy never dips. It never goes down. It's a line of credit against the policy. So that 6 to 10% every year that policy is constantly growing. It's constantly, that total amount of that cash value is always growing, somewhere around the 6 to 10% range. So as we're drawing against that, right, say we're utilizing that 5% line of credit to go do a development project that's going to take, say, 2 to 3 years to go through the whole process. Typically, right, we're essentially making a positive arbitrage that whole time, right? Because we're not taking the money from our principal. Principal is still growing. So, and the thing of development is you're never cash flowing, right? Right. So as we're utilizing that line of credit at 5% to develop and draw out for our project, that principal is still growing at a positive 1 to 4%, right? And then as we do the project, stabilize it or sell it, or stabilize and keep it, then we refinance it out or take the proceeds, the profit, clear out our loan, and then the cycle keeps going. So over the course of time, that's essentially the model, right? Is to utilize that and keep it growing and utilize our insurance policy to go buy assets, because at the end of the day, we don't want a big bank account of dollars, right? We want to leverage that into assets, whether it's gold, whether it's a portion of a stock portfolio, whether it's real estate, whether it's crypto. You can utilize it for any type of asset you want, right? That's the goal. And that's how we're utilizing it internally for our development company that we're building out with this model. Now, this model works for any business as long as as long as the investments or the business you're running is profitable. This model continue to grow, and you're essentially attaching an infinite bank that you're funding your business for. So essentially, how we're saying is that we're going to raise capital once, and we'll never have to raise capital again, just by utilizing our projects, our profits come back
As
in.
long as we're making profits from our projects that we're putting our line of credit and it keeps coming back into the policy and then back out and then back in, it keeps compounding and compounding, right? 6 to 10%. That the insurance company keeps matching. And then
our projects profit as well. And we just keep injecting it as much as the insurance carrier will allow back into the policy. So it just continues to grow and grow and grow and grow. And it'll be a 5 to 10 year process. It's not overnight. Now, we're working on ways to where we can do, say, for example, you can do a fund model and then inject this into the fund or run your fund off this. We're working on that, but it's not there yet.
Gotcha. So if I'm understanding this correctly, essentially you'd have multiple people come in. So the capital raise would be multiple people coming in. They become partners in the company to a certain extent, and then they would own a portion of life insurance associated with that company somehow.
Right.
yeah,
The company would leverage their life insurance policy.
that's right. They get a death benefit. Let's say the death benefit is theirs. They get 50% of that, I believe, depending on what it is. But then they don't get to touch the cash value because that's there for the engine, the infinite bank for the whole entity. So we all get to tap into that to go deploy it and to put it back in and deploy it. So essentially, it's security for them, right? It's an investment growth vehicle for them, right? And it's also allowing them to have a death benefit for their financial freedom for their family in the future. So it's 3 in 1. Yeah.
And so would the control, so to speak, of the financials of this be similar to a fund in that, each individual member doesn't necessarily vote on each project? You're going to have individuals who, probably you guys, namely, or other operators that end up coming in who are experts in their field, and that's where that decision making is going to come.
Right. So essentially, it would be the corporate structure would be like, hey, we have our SKIA land fund right up top. And then we would have a branch off of like, hey, this is land fund 1, this is SKIA 1, then we can have SKIA 2 with different partners and investors in each one. Right. I believe we're capped at, I think, 5 million that we're capping on for each one. And each one will have its own pool of equity stakeholders, investors that come in, and it's just and then our total company will own all those policies together. So it's like we can own an infinite amount of insurance policies essentially for the business. It's pretty cool.
And I just want to touch on this. I'm curious how this relates to this particular scenario. Obviously, one of the reasons investors get into whole life, right, and want to overfund the fund is because it's money that no one can take away from you legally because it's life insurance. So you can't be sued and have that revoked. So it kind of places your company in an interesting position. And, you want to talk about that?
I didn't even think about that component. That's another layer, right? That's another even interesting layer that you can dive into on a security standpoint. It's very fascinating.
Because as an LLC, technically an LLC could be sued and whatever is owned by that LLC could be taken. But we're talking life insurance as the source of the infinite banking for the company. So interesting
Again,
thing to feast your mind on.
Nobody's doing this. This is a thing that we've we're creating as we speak. It's just not being done anywhere. So that's the crazy part. I don't know how we came across this, but it's happening. So it's kind of like the light bulbs are going off in everybody's head of like, hey, this is pretty interesting, right? There's a lot of ways that Everybody can utilize it. Anybody can utilize this. That's the cool thing. That's what we're so excited about, is everyone can use this system, essentially. It's not limited to a specific type of business or a specific type of investment. Anybody can do this. You're just
Yeah, I mean,
attaching.
we can literally tomorrow we could have a call with like, a company that has 100 employees and plug this into their key man and plug this into their entity and show them how to set it up, and then they just run with it. And before they know it, they're running their own infinite bank, and they never have to go to a bank and get capital unless they need more. Then they can actually get into their own capital based on their employees' investments. So.
And then what does that do to the valuation of the company? How do you value that company?
Yeah.
Right?
Yeah.
If you attach a bank, an eternal bank that's continuously growing and compounding to a profitable business, what does that do? I don't know. I have no clue. How do you value it?
There's no one evaluating that kind of stuff right now.
Yeah.
Because it doesn't exist.
It doesn't. Yeah.
Really fascinating. Wow. I mean, this has a lot of potential ramifications for people who want to build a massive private money lending business as well. That is very, very secure. We have a lot of people doing, fund of funds and, debt funds and things like that to gain access to more capital in order to be able to do, private money lending. What are the benefits to the person who holds the insurance in the company? How do they gain from this beyond, say, just the death benefit? And, is there like a profit share that they will end up gaining from investing in your company? How's that work?
Yeah, how our company would be working, we'd be essentially giving away 20% of the equity of the company. So as this thing grows, all the assets we acquire, everything, right? There'd be 25% equity stake in that specific entity. That's how we're doing it. You can. There's 1,000 ways to skin the cat, right? So you're getting long-term benefits. Then eventually down the road, you start getting cost segregation and tax depreciation benefits from us acquiring assets, developing assets. Then you're also getting that we're literally checking every box off the thing. Long-term growth, fast growth through profits, your death benefit that protects your family in the future. It's everything. And
Yeah, we have yet to find
Security from
someone.
losing it.
Yeah, we have yet
Right.
to find a CPA that can do this for us.
Interesting.
It's a lot of like, cross segregation, tax-free money, because life insurance money is tax-free when you take that line of credit out. There's a lot of different things going on. Yeah.
And then we're trying to connect another dot, which is what do we do with the profits that our company gets, right? Because those are technically taxed at capital gain, right? But then we are figuring out to figure out that problem essentially, and that is something that we can utilize called a deferred sales trust, right? I don't know if you're familiar with that. It's essentially a better variation of a 1031, right? What we're not limited to when a 1031 where you sell a property, investment property, you have 60 days, whatever it is, to roll that capital into another of more value or similar type of asset, right? But with a deferred sales trust, you can take that money, you put it and you sell it to your deferred sales trust. As long as you touch the principal, you're insulated by time. You don't have to pay capital gains tax. And also the kicker is, say you sell a portion of your stock portfolio, you throw it into your deferred sales trust, and then you can deploy that capital into crypto. You can deploy that capital into buying gold. You can deploy that capital into real estate. You don't have a restriction on how you can utilize that capital. And that's the portion we're trying to figure out also now to get rid of the capital gains portion. So a lot of different moving parts. And again, we're learning as we're going with this. I mean, I haven't seen anybody else doing anything quite like what we're doing here, trying to accomplish. So
that's awesome. This could be very, very interesting to see how this ultimately shakes out. Are you guys familiar with the Rockefellers and their use of?
Oh yeah.
Mm-hmm.
I mean, it's essentially how they've perpetuated their wealth for their family was through whole life and infinite banking.
Yeah.
Very interesting.
Imagine if they had this concept of triple compound interest.
Yeah, right.
Right. Essentially a better vehicle than what they have
It's 3 times better because of all the compounding that's going on within it. Yeah.
We got the Rockefellers and You're gonna have to come up with a combined name for you guys. The Priori.
Back in
Kida
the day,
Priori. That
when
sounds.
the
That's kind of catchy.
yeah, when the Rockefellers used whole life back then, it was actually the best thing out. Like the interest rates were awesome. Everything was going for them in the positive way. But over the years, the decades went by, and the interest rates dropped, the fees went up, and it's gotten less and less more favorable. But now we have a new vehicle. So back then, that probably was the best thing. This obviously didn't exist. What we're talking about now for only like the past 10 years, but then whole life was where it was at. I mean, back in the day, that's how they built it. It was like 10, 12%. It was just unbelievable. I forget the percentages. I don't want to misspeak, but it was really, really a big thing and worked really well whole life back in the day, but not anymore.
I think one of the biggest things that society does that shoots themselves in the foot is not growing and expanding their knowledge about the vehicles for growing their wealth, right? There were vehicles that worked over time, right? You kind of touched on it with the Rockefellers, right? This was the vehicle that was maybe the best at that time. Then we moved into the whole, I don't know. I'm not sure if 401ks were ever really that great of an idea, but it was a vehicle nonetheless. And, you know, at one point you could throw your money into a CD and it grew really well. And I still have, people that I know that think you can throw your money into a CD and it's a great way to, grow your money. But, I love the fact that you guys are tapping into something that is very unique, very potentially cutting edge with the wealth growing potential here.
And if anybody can show us a better way, show us, because I can't find it.
Here's something. If people are listening in and they're like, "Oh man, I have whole life, and now I wish I had this." Did you know, just like a 1031 exchange, you can transfer
1035.
1035 it into this policy, no problem. Yeah.
Yeah.
So
Interesting.
it's a
There you
beautiful
go.
thing.
Yeah. I literally just did a 1035 on my whole life. I switched from one that was not optimized great for the infinite banking to one that is optimized for growing that infinite banking. But yeah, this is really cool.
Very cool.
Wow. So you've done, wow. How do you even pivot from that? Anyway, that's freaking amazing. So okay, what's sort of your timeline on this? What do you guys think that you'll be launching this? Are you launching it now, or when can people join you on this?
So we can launch it now, right? But there's a couple moving pieces back on the back end that we're getting done, some key partnerships that we're looking to bring on. But it is technically we can do this now. We just haven't released it yet.
What we're doing again, and everything we do in life is who, not how. Everything, because even talking to certain groups that have a ton of access to a ton of people, they end up saying it's just a lot of work, right? And what happens is me and Mitch were a small team, right? We know how to leverage. Leverage is one of our key words. You'll probably start seeing that a lot more as the months go on. The word leverage. That's more of our slogan, and that's a company that we're probably going to build out, because we're all about who, not how. So it's leveraging the right people getting into this vehicle. Could be a lot less of a hassle for our CPAs and for us to organize who's getting 20%, who's getting 2%. And at the same time, it's getting us to a place where we're getting to where we want quicker with a lot less work and effort, right? And I have to say, God rest my father's soul, he taught me that from the beginning, which is like, be smart, work smart and work hard. That was the concept. A lot of people will say, well, work smarter, not harder. But with my family, it was work harder and work smarter. That's how you outdo yourself. And I'm always about outdoing myself. I really don't look at the competition. I don't even know what they're doing. But it's about working smarter and harder. And when you work smarter and harder, the combination of the two, it explodes. So the whole concept, if you leave anything with how we've gotten to where we've had in such a short amount of time, it's who, not how. So putting this like SKIA together, what we're calling it, right? And it's about what type of entities do we bring in to do this in a smart, quick, efficient way versus bringing in one at a time, one at a time, one at a time, and it just takes forever, you know. So yeah,
And also, business and life is truly not a zero sum game. It's not. We're taught backwards where you're competing and everything's got to be done by yourself. When in reality, nothing is done by yourself. It's just not. You don't learn anything by yourself. You don't do anything by yourself. And the quickest way to do that is to leverage everyone and leverage each other, and then everyone wins. I mean, it's not a zero sum game. That's the thing that I probably learned. As soon as I learned that, I'm like, oh, it's a paradigm shift, right? For a lot of people, is it's
you're
not a
not alone.
competition.
Yeah.
Well, it's like, oh man, who said this recently? They mentioned how that our whole education system teaches people that you got to do everything on your own, that you got to do your test on your own, that you got to come to the right answers on your own. And he was like, man, I don't want my kids to learn that. I want them to learn that, at the end of the day, it's all about, like, life is all about, true entrepreneurial work is always a group activity. And it's all about, seeing someone else's answer and saying, dang, all right, I can use that, and learning from somebody else. So yeah, I love that you guys have quoted that. Who Not How has become one of my favorite books. So I
I've never even
you
read
haven't
the
even
book.
read the
I
book.
kind of understand the concept.
Dang, that's
No.
amazing. I mean, it's pretty self-explanatory. The whole book is like you read the
Right.
title and you're like, oh, yeah, like that's a concept that makes sense. But the more you read it, I mean, it's just brilliant. I actually love the audiobook version because the guy who didn't write it, who wrote it, right? Because he had a who that wrote it for him. That's kind of a hilarious component to the whole audiobook component is the guy who wrote it for the guy who thought up the idea is the who. And so but there's a lot of commentary from the guy who, what is it, Dan Sullivan, who thought of this concept and really promoted the idea and has mastered it. But I can tell you, when I first started this entrepreneurial journey, my thought was, well, I got to learn a lot of stuff. I have to learn, how to do this and how to do that and how to do this. Right now, I'm in this process right now of trying to figure out, what do I not need to learn and who do I need to meet? That's literally what I am trying to figure out right now. What do I not have to learn that there's somebody who already knows it better than me and we could just work together really well?
Yeah.
And
It's
I
smart.
can,
That's working smarter, right? That's what Mitch and I do. Sometimes I creep a little bit into Mitch's lane, and I'm trying to learn like the land a little bit more. I'm trying to learn like the contracts, and I'm like, wait, Mitch, I'm going back to my lane because I'm really good at connecting. I'm really good at marketing and sales and getting the right people in front of us to do deals with. And sometimes he'll creep into my lane and he'll do a little bit of the sales and marketing. He's like, what am I doing? He's like, so it's like knowing what you do really well and just doing that full on steam ahead. And then figuring out what you're missing and finding those people on your team to plug them into those places that they do it really well. And I think those are the best teams that do really well. It's like everyone sticks to their lane. I don't want to do that. I don't want to do this. I want to do what I do best, and everyone just sticks to their lane, right? And that's the way you kind of can explode quickly, because if everyone's full throttle on what they do best, everything kind of clicks a lot quicker.
And the other thing too is, right, I like having also a form of shiny object syndrome always, where you're always kind of looking at what's out there, right? Because otherwise you never know. You never can grow if you're not kind of always keeping an eye on, like, hey, that's pretty interesting. How can we utilize that? But keeping it in, like, within a parameter where, like, all right, we're not just going to completely shift everything we're doing every 5 seconds, right? Because that's how we come across this opportunity that we're doing now with this life insurance stuff, and how, you keep expanding and growing and seeing other opportunities that are out there that you just level up to. If you're Otherwise, you'll stay at the very first step, get so good at the very first step, right? Or the very first, level up, that you never see past that stage, right? So we're always looking for what else is going on, what are other investment vehicles are out there, what other opportunities are out there, and then also at the same time making sure we're still doing what we're doing internally. So
what percentage of your businesses are doing the different types of things that you're doing? You got land, you got PML, you got this new venture. What would you say your divvied up time is on each of those ideas and
so what's so fantastic about the land entitlement portion is 90% of 90% of it is a waiting game. And a lot of that is our consultants are doing most of the work as well. So our civil engineers, geotech, land use attorneys, if we have to rezone a property, that's all third parties that we're essentially paying them like subcontractors, right? If you're doing a fix and flip, you have your window guy, you have your drywall guy, whatever, right? It's the same thing as in land entitlements. We have our consultants that we're paying, and the more money you have, the more consultants you can pay for it and release some of your time back. Most of the time is finding opportunities and then putting all the pieces together, right? Managing that. But really, we have a couple entitlement projects that we're doing now. It's pretty hands off, right? So really, we're focused today. How do we make money today? And that's a lot of the short term gap lending, transactional funding, and that's where a lot of our time is spent because a lot of the bigger projects, which is great, they just take a lot of time because a lot of it's like, hey, we got to wait 30 days for the city to make comments on this, and then it's 60 days for them to review our site. So it's a lot of waiting, right? And that's what allows us to have a lot of time to focus on the opportunities today, right? And that's kind of how we balance that essentially. And we also have key partners that we partner up with in these different metros across the Sunbelt regions on that as well. So that kind of, to answer your question there, is how we're utilizing and splitting our time.
what kinds of who's are you guys looking for next?
So always, who are our angel investors? Who are other people that are looking for fantastic returns on the short term and long term? Because you can never have enough of them, right? It's better to have an abundance of resources on the capital side because, again, that comes back to leverage, right? We want if you have capital, you can leverage everything else: time, money, deal flow, everything. You can leverage everybody with access to capital. So that's why our sole focus is really on the capital side.
Right. And then another thing who, the type of deals, this is where it always goes back to reverse engineering. What type of deals do we make the most money in a short amount of time? Right? I'll say it again. What type of deals can we make the most money in the shortest amount of time? And then it's like, okay, that's where we're focusing. Now, who are those people involved in those transactions? And go after those people. And then it's like, okay, those are the people. Now, where do we find them? Do we find them online? Do we call them? Where are they? How do we call them? Do we email them? Then it's like, what do we say to them? So I would say right now, like transactional funding is really big for us. We have a ton of capital for that, right? So because that's in and out, same day money. So we're looking for all those who's, right? And then, a lot of it has to do with like, even with our SKIA that we're building with the life insurance, like we're always looking for the cheapest money possible, right? And with the life insurance, I don't know if we said this, but when you take out a line of credit against your life insurance cash value, do you know it's 5% interest? However, you never have to pay back that 5% interest until your death benefit pays out. So technically, that's the lowest amount of money we can ever have. So having this conversation, I'm kind of having a revelation like, oh crap, maybe we should be doing the SKIA a little bit more because that's going to be the cheapest money we can ever get. When you really think about it, that is the cheapest money and it's an infinite bank. So how do we export it? Me and Mitch are going to have a call after this, Mitch.
See, this is very, I mean, we're
because when you borrow against a life insurance policy, you're not obligated to pay it back. It does, it can eventually deplete your death benefit, down the road if you don't keep paying that back. But yeah, you're not obligated. You're never going to technically default. Obviously that wouldn't be a good long-term plan if you're not paying that back on a regular basis. But yeah, for sure, it's beneficial when you pay it back, but there's also not the crazy risks of, oh crap,
Yeah, it's truly your own money that you're lending out to yourself on whatever time frame you want to pay back. You want to pay yourself back in 30 years? Great, you can give yourself that term. You
You're
want
the
to go
bank.
you want to go out to dinner? You want to go put it toward, you can do whatever you want with your capital because it is your own money, right? And that's what's so cool. That's why I think it's better than 401ks and all that other stuff because there are limitations on what you can utilize with your money. Whereas there's no constraints. You can do whatever you want with your money.
Yeah. Yeah. I like seeing the revelations happen in real time. That's kind of cool.
That's what happens when you come on this podcast,
Absolutely. Absolutely. Yeah. I am really intrigued to see what people say in the comments below. We'll have to keep an eye on that and see if anybody comes up with some interesting questions along or ideas that come out of this podcast. I know I have a lot of ideas. I've been eyeballing because I'm doing this private money lending as well, and I have access to some capital, but not in the ways that you guys do. And these are very unique, ways. And obviously the whole life insurance thing just adds a very interesting perspective to my perspective journey getting into private money lending. There's just a lot to ponder on that as well.
And at the end of the day, it's not a get rich quick overnight thing. It's a long-term strategy that really gets crazier and crazier as that compound interest keeps going into effect and you start looking 10 years down the road, 15 years down the road, 20 years down the road, this thing just explodes at levels. I mean, it's a combination of both, right? There's ways to leverage that to take that capital, make larger amounts today, and also have that thing grow simultaneously faster down the road. Just depending on how you utilize it, right? It all depends on you can have the same system that we have, and you can lose everything. It's always dependent on the individual who leverages the system, right? You still got to make the money. You still got to figure out how to do that, right? It's not like it's going to do it itself. It will to an extent, but not to the level of what it can be if you utilize it properly.
Sure. Yeah. Yeah. So, in the here and the now, for the here and the now money, what are some ways that, obviously you're in the Gator community, there's I've seen you putting yourself out there and, sharing that you've got access to capital. You want people to work with you. What are some ways that some Gators, folks in sub 2, folks like even me, can work with you and, kind of help your game and help ourselves along the way in this journey together?
Yeah, we're always looking for people that have new construction opportunities, whether on a hard money lending side, we'll do new construction, fix and flip, DSCR loans, the whole gambit, right? On that side. And then also we'll provide second position gap funding, depending it's the right project. Now, typically, this capital is not as cheap when you're getting to second position, more unsecure positions, to where really it doesn't make sense unless you do have some form of value add component to your project where you're getting a larger return on the back end where it makes sense to pay that money, right?
Yeah.
And it all depends, right? How many more deals can you do if you have 100% financing with a combination of the hard money and the gap, right? Can you do more deals? You don't have as much opportunity cost, right? So say you put your money out into this deal. Well, shoot, now I don't have any money now to go into this deal, but now you can potentially have access to that to where you can do multiple deals. Now, you might not get the best return compared to if you were using your own money. You're always going to get the best return if you use your own money, right? But it's just another tool. It's just another tool in the tool belt. And if anybody's got opportunities, we'd be more than happy to take a look at them and see how we can be a fit.
Yeah, and I don't know if you're going to put our contact info, but I'm happy to drop my number if anyone wants to reach out. Whoever's watching can always text me. I don't know. I see Pace do that with some people that are doing success stories, so I'm happy to drop my number as well if people want to reach out.
Whatever contact info you guys want, I always go and put the contact info of my guests in the description down below for the video. You can actually even find it on Spotify. I don't know about other outlets. I am expanding my podcast eventually to other outlets. I've focused heavily on YouTube because I want to build that audience. But eventually, yes, you will be seeing this in multiple, avenues. Yeah. Cool. Yeah. Well, I guess the last question I have is, in those second position deals, you mentioned that you were doing up to 100%, which is exceptional. We tend to think of those as being very high risk, but I am familiar with, there are people that do that. How does that work? How are you guys managing the risk when you guys are taking projects up to, higher equity positions?
Yeah, so essentially it really comes down to who is the operator, who's the borrower, what's the project, right? So who's the jockey, what's the project, and then what's the return, right? What's all after that, right? So also, is there any form of cross collateralization? Is there any way that you can put up or do you have liquid cash, right? Do you have capital that's liquid in order, if we come go south, what are all the exit strategies? How do we get our capital back, right?
Yep.
That's essentially.
Yeah. And Mitch, you're breaking up a little bit, but I know Mitch has had really bad internet all day. So I don't know how much longer it's going to last.
Yeah. No, that's great. That was a good answer. I appreciate that. Obviously with Melissa Palmer and working on the safety course and everything, she's deep into the you gotta vet the borrower, gotta know your operators, and really know what you're getting into with that as well. So that's fantastic, guys. Well, we're coming up on the hour, and this has been a really great conversation. I have a lot to feast my mind on tonight as I think about this after we close. But this was really great. Thank you guys so much for sharing your insights, your expertise with us today.
Thank you as well. Appreciate the opportunity to be on here. And anybody who wants to reach out, feel free to reach out.
You bet. All right, to our listeners, thank you so much for tuning in. If you enjoy this episode, please like and subscribe to our YouTube channel. We'd love to hear your feedback in the comments below. Join us every other Tuesday for more insightful discussions on nursing real wealth. Have a great day and God bless.